If you've ever looked at your commercial property insurance and wondered, what are all of these deductibles? How much are they costing me? This video is for you. Today, we're going to be talking about commercial property deductibles, how they work, what they are, and most importantly, leave you prepared to understand what you're purchasing so you're not burned at the time of a claim. Deductibles are not just a number on a policy. They have a direct correlation to what your out-of-pocket expenses will be at the time of a hurricane or a fire, even a theft. Most people assume that a lower deductible is better, but that's not always the case. Your deductible not only has a direct correlation and impact on the rate that you're paying, your claims experience, but even it determines if it's even worth filing a claim. So here are 3 things to know about your commercial property deductibles. Number 1 is understanding the type of deductible that you have. There's a flat deductible and there's a percentage deductible. A flat deductible is easy. It'll say it's $5,000 or it's $10,000. Here in South Florida, we have a lot of percentage deductibles. You probably can see it on your property insurance or on your homeowner's insurance. It says 2%, 5%, even 10% sometimes. If your policy has a percentage deductible, it's important for you to understand that it is not a percentage of the damage that the storm has caused. In South Florida, the percentage deductibles are tied to wind and hurricane deductibles. The deductible is a percentage of the building coverage. So here's an example. If your building is covered at $3 million and you have a 2% deductible, your deductible for any hurricane, wind, named storm is actually $60,000. The second key thing that you should think about when picking a deductible is matching it to your risk appetite. In some cases, higher deductibles do equal lower premiums, but that's only good if you have the cash and reserves to pay that higher deductible at the time of a loss. If your deductible is too high and there's a claim that happens, it's almost like having no insurance at all if you can't afford it. As we like to say, if you can't afford the deductible, you probably cannot afford the loss. So it's better to take on the cost up front of having a lower deductible to ensure that at the time it needs to be used, you do have coverage. And the third thing to understand is that you shouldn't just be looking at the cost per year or the savings per year. You really need to look at the total cost of the policy and the deductible. So if raising your deductible saves you $2,000 for the year, but it increases your deductible by $50,000, is that really worth it? That's a decision that only you can make. I know that commercial insurance and specifically commercial property insurance can be so complex. You don't have to be an insurance expert. You just have to work with the right partner. At The Bunker, we love to help small businesses that own their commercial buildings. We love to help condominium associations and homeowners associations really understand what they're purchasing and how their deductibles work. If you're looking for some help in understanding what your current policy covers, click the link below and we'll be happy to chat.